Yo,
Yo, yo, yo, yo.
what up, Mikey?
What up, what up?
Yo,
Good. Y'all watch what y'all say on here, bro.
yes, just going on YouTube.
What's going on here too?
Not trying to get the video flagged. No loose slander.
Hey, somebody report us. Only two people report us,
No,
dog.
man, no, bro. Don't do
that might be enough to get us flagged. We ain't got that many people. Take it down. Y'all got one report. Y'all gotta take this down, man.
Hey, say, bro, you want me to
Oh, hold on.
let me show you what I was talking about before we get into it.
Say something again, Mike.
I said let me before we get into the meat and potatoes, I wanted to show you. I think it's gonna really help when I come to them gaps and them intraday gaps.
Doing a little DJ right quick. Hold on. Mike,
Yo,
did you you checked IG today?
oh, who IG?
That group on there to see if Miss Ant needed passwords. I know she said she possibly like.
No, I can check it right now. The password.
Yeah. Not the password. You probably don't have a link on
The link,
it.
that's an L. Hold on. Nell
Yeah.
got that
In
big
that group.
thing.
Is it? Down in that group?
No.
No, it's not.
Nell could send it the link, send you the link, and send me the link. We can put it in there.
Yeah.
What you need me to do?
The link.
The Zoom.
Send it to your phone?
Just send it to the group message.
Okay.
And I can pull it from there.
Okay, I'm about to send it.
Fuck no.
Hey dog,
Hold on. Okay, Mike.
before you get into it, before we break it down, I just want
So I think this is the
I'm gonna do my good deed for the week. I think it'll be easier if you let me
You wanna take over?
if I share my screen, it'll be easier if I do it.
Okay. Uh
That way I don't gotta tell you where to go and all that. It, it'll help. It'll help. All right, I'm the host. Let me take this Pornhub off. All right. Oh man, I shouldn't have said they're gonna get flagged. All right. So look, guys, this is what I got. This is what I got. This is the 5 minute, and this is the 5 minute short. And I'm gonna go to a higher time frame, probably the 1 hour. But I just want to show y'all for people who struggle. This is for the people who struggle finding trades, knowing when to get in and when to get out. I'm gonna show you. I'm gonna introduce you to the fair value, the gaps, the fair value gap. Like so, this one, let me draw it out. Draw it out a little bit. And you have this gap down here. So remember I told y'all last week or the week before, the gaps that are created coming off the highs and the lows are the ones that you want to look for, right? So these boxes that I have highlighted, they trading ranges. Like so from 1 o'clock in the morning to 4 o'clock in the morning. This is the London range right here. This is the London range. This blue range right here is the New York session, the opening range from 8:30 to 11. And then the red box is the lunch session from 11 to 12:30. And then from 12:30 to 3 to market close. That's the evening range, right? So the reason why I got these highlighted because it gives you the liquidity above these old highs and lows. So you got your high from the AM session, you got your low from the AM session. The lunch session is really, most days is really just consolidation. And then your PM session, you got your high, you got your low, right? So most time, so let's go back to the left. So let's focus on this area right here. Let's focus on this area right here. So you have your low from London right here, your swing low. You got your low from the previous day's PM session right here, right? The market attacked them lows. This low, right? And if your eye is even a little sharper, you'll see that we came straight down to this order block right here. But that's neither here nor there. You're looking for lows. You're looking for lows. So once those lows are taken out and the market reverses and creates a fair value gap, you're looking for entry to take it to the upside. So now where am I taking this trade to? That's a good question. So if you're not confident in taking this this getting in this trade right here, getting long right here, that's fine. That's cool. You ain't late to the party. The party just starting from here. So now the market creates this swing high right here. See this swing high? Yeah.
Mhm.
Right. We see this swing high. So you want the market to trade above this swing high. And when it trades above this swing high, it's called a shift in market structure. So it also creates a gap. So now my antennas raised. This is where I got in my trade at when this is where, I took it to the highs. This is the trade I took. So now that the gap is created, you're looking for entry. Now, how do I find entry? It's a good question. I'll be happy to answer it for you. So on a smaller time frame, which this is the 5 minute, right? These consecutive down close candles right here, these 4 candles, these consecutive candles are considered one order block because it's a smaller time frame. Now, if it was on the 10 or the 30 minute, it would probably be one candle. Or the 1 hour, it'll look different, but we're gonna go to the 1 hour in a second. But these 4 down close candles it's called an order block. So now the gap is created here. We close above this swing high. The reason why it's a swing high because it's the highest closed candle in the range. It's a swing high. So now that we closed above the swing high, we created a gap. Now I'm looking to play. So entry, most people, the impatient ones, they're probably getting at the top of the gap. If you trained your eye to see the order block, you probably try to take entry here or even down here. 9 times out of 10, you probably won't get picked up down here, but this order block. So now your entry, this is your entry, right? So I'm into my trade, I'm long. So now the next question is, what's my price target to get out? Great question to ask. I'm glad you asked. The next price target to get out is above the old highs. This is your high right here, 48.2175. So from 48.09 to 48.21. That's what, about 11 points. 4 contracts. That's what, $2,000, a little bit over $2,000. Right quick.
11 points
Huh?
on 11 points.
Yeah, 4 contracts.
Oh,
No, I'm
yeah.
lying. That's $2,000. I'm sorry.
Oh, no.
It's $2,000.
I
Yeah,
like
I said it's about $2,000.
yeah, $2,000.
$2,000. Right quick.
Think about the 8. Yeah.
Right quick. Right?
Yeah.
So that's your entry. Your long, boom. This your high.
Mhm.
Now you could have took this and been fine with it, been cool with it. I'm done trading. I made my $2,000. But I'm looking for the market to take this high out. You know why? Because we never took this high out. So I'm gonna sit in this trade until we take this high out. And that's exactly what the market did. So this was my price target. 48.32. Now notice there's another swing high right here that we didn't touch. We got close to it, but we didn't touch. Now, let's go vice versa. Market took out this high here. So if you notice, once we took the high out, we didn't go any higher, right? Wick. Boom. Started selling. Once we started selling, what do we create? A fucking gap. Look at that shit. I'm sorry. This is a recording. I can't that terminology. So once we started selling, we created a gap. Fair value gap. Now, there's a gap here to the upside. Then there's a gap that closes beneath that gap. This is called an inversion gap. An inversion gap is when a gap is created and is immediately closed beneath. So your entry is the top or the bottom, well, not the top, but the bottom of this gap that was created. This is your entry to the downside.
Okay.
48.24. Now, if you selling this, you probably like, well, what's my target to get out? I'm glad you asked. I'm glad you asked. So when you're trading like this, you're looking to get out at either highs or lows, right? So now that we're selling, we're looking for a low to get out at. So from 48.24 to boom, this swing low right here, 48.09. We right back at it. So that's the entry from the original trade.
Yes.
You see that? So now I'm getting, so if I trade this inversion fair value gap right here at 48.24, my first price target is this low, which the market came to attack right here. So for instance, so let's say you took these two trades today, that's a quick $4,500 with 4 contracts. Now you might trade 1 contract, you know, but all in all, this is what price does. Now, so you got your inversion fair value gap, you trade down, right? So now you like, okay, well, we have this gap right here that I'm looking at to see if we fill. Now, you don't have to trade this gap fill. You don't have to trade this gap fill at all. You could just get to hit your price target and be done. But the market trades back higher and then fills the gap. Now notice, now this is the important part. Notice how once this gap was created and this gap took us to take out the highs, the previous high. Damn, I hate when my chart do that. My bad, y'all. So this gap took us here to take out these highs. But you notice how once we came back to this gap, we never traded below this gap. So to me, that says that, okay, we can expect higher prices. But now that this gap is filled, now it also created the low, it's also created the swing low for that session, the gap fill. So now once this gap is filled, once we trade below this swing low, you can expect the market to come get this low and this low, because this low was already taken out. There's no reason to stop in this range now, because we pulled the liquidity from this range, the lunch range. So you could expect the market to come take this low out if the market is bearish.
Take which low out? Point to it again?
Right here.
Down there. Okay. And would that be after it takes out that other low?
Yeah, so
Take out this one first, right?
Yeah. So you could expect the market to take these, because look, if you look at it, all right. I'm gonna just do it without the boxes on there. So if you just look at it with the naked eye, it's like this low is just out here by itself, Long Ranger. Look at this. Look at this. Look at the structure of the market. So this low is out here just chilling by itself. The market going to attack that. The market is definitely going to attack this and this. Look, he just chilling by itself. See what I'm saying? So what I'm trying to portray here or trying to show you guys is this. Those gaps that are created after liquidity is taken above old highs or lows, these lows, this swing low here, it's kind of fine. It's kind of finite right here. You probably won't be able to see this here, but you can see this. You can see this low. You can see this low. You can see these lows. It's a reason why they're down here. So once you see the market takes these lows out really aggressively with this candle, and then we reverse. Once we reverse creating a fair value gap, now I'm looking to go long. So if you're struggling with finding a trade, finding when to get in the trade and when to get out of trade, this is the perfect example for you, right? So you got your old high, you got your high here, simple. I take this. So on this leg, on this price move here, notice how we didn't take this high out. on this price move. So, but we came back into the gap, hit the order block, then we took the high out. So that's a perfect trade. And that's the trade I took Friday. So you get in here, you get out here, you're done. Or you get in here, you get out here. Price target. Because notice how this high was just chilling out here by itself. Just chilling. Now you have another swing high next to it that we didn't even touch. We got close to it, but we didn't touch it.
So close.
Got close to it, but because the market is leaving that there for a later date. Because eventually we're gonna come take all these highs out, these relative equal highs. We're gonna come take these out. So in essence, dog, this is what I just want y'all to see. When you struggle with trying to find, especially if you're trying to trade these gaps, I feel like this is the easiest way in this market to make money. When the market takes out a low or a high and creates a fair value gap. Now, this like this one right here. You take out the highs, create a gap. Now you notice how we had a gap here. Traded and closed below that gap. Entry should be here. Did you take a little heat? Yeah, you took a couple of ticks of heat. That's fine. But into here, price target should be here. The low. The swing low. The swing low. This is intraday, day trading, the ES. These concepts work on larger time frames too. So let me show you. Go to that 1 hour. Let's go to the 1 hour, and then I'm gonna get off my horse or whatever you want to call it. So even here, right? The reason why, so the market reverse here. I believe we filled this gap. So the market, I'm sorry. Once we filled this gap, the market reversed, created a fair value gap. So once the market reversed off you can say off the lows or off an inefficiency here. Fair value gap, fill both of them. Created a gap. You get long from the gap that was created, or said order block here. Same thing, same rules apply on a larger time frame. Let me draw your attention to this. Swing low. You see this swing low here? Market came to take that out. Reversed. Fair value gap. Trade back into the fair value gap. To the highs. Now this the
So
1 hour.
Taking that one. You're taking that one from the bottom, correct?
Yeah, so there's no reason
out
for
the
you
low, and then you create a gap after you take out the low.
Yeah, so you want the low, you want the swing low taken out first. Once the swing low is taken out, you want the market to trade back into this range. But you want it to create a gap.
Which it did.
Yes, it did. Now this is the 1 hour time frame. The other time frame I was showing you was the 5 minute. So for me, the 5 minute, those are the trades that I like to take because I'm not, I could just get in and I know where the market is going. Boom, that's it. You find a better entry on the 5. But the 1 hour, this is the 1 hour. This is that same high I was speaking of earlier that we never touched, 48.32. Fair value gap here. Trade back into it here. Price target is here. So let's see, from 91 to 32, that's a decent trade, I believe.
Oh, excuse me.
That's a decent trade. But
and I'm taking, for clarity, I am taking where the gap is created, right? Down here at the bottom.
Yeah, so this
The width.
gap, this gap, this gap, in all honesty, this gap is a little bit cleaner than most gaps, because most gaps on the opposite side, they have like a quote unquote level or inefficiency or order block, whatever the case is. They'll have an inefficiency, you know what I'm saying? So now this gap is clean. The market rebalanced here because we created, if you notice, we created a gap here.
Going down.
Going down. Close above that gap.
Okay.
So even if that, even with that, bro, you could take this as an inversion fair value gap to the upside. So you take a little heat, you're gonna take a little heat if your entry is here. Take a little heat, but what we talking about? You see what I'm saying? We're here to make money. We're here to make money, not to be right. We're here to make money. So, but your gap is created. You trade back into the gap. Do you have to be patient and wait on this trade? Yeah. You gotta be patient. You don't want to be clicking a button, losing money. But do you have to be patient? Yes. Your entry here, take a little heat. Take it from here to the high, which is here. This is your price target. This swing high. Even now, I'm not gonna hold you. My price target is here, but if you look at it on a smaller time frame, you see how the market gave you. Go back to the 5. The market gave you 1, 2, 3 times to get out. See, when it does that and they keep closing, like I'm getting out because it's trying to reverse, and it's exactly what it did. But you're not gonna see that on a 1 hour. You know what I'm saying? You're only gonna see that on the smaller time frames because the smaller time frames are printing more candles. So does this make sense for everybody?
Makes sense to me.
No? Yeah.
Well, for the most part, yeah. I'm gonna go back and watch it though.
Yeah. So here's the thing. This is the important part. The important part is being able to recognize where the swing lows and the swing highs are. Notice you to be able to notice those, notice where the market is at the time. So wherever price is, where's price, where are the swing lows and the swing highs, where are we headed? Once you see where we headed, we take out the lows of the highs and then we reverse course. Now, sometimes we'll take out a high or a low and keep going. That means the market is expanding. But in this case, we took out the lows, we reverse course. Now, if I was being sharp, I would have really got in here. But I wasn't being sharp. I wasn't really paying attention because once I saw this gap, once this gap got created, I'm like, all right, once you trade back into this gap, I'm taking it. But I wasn't paying attention. So I had to wait until this quagmire candles formed. This gap was created up here. I had to wait for that. Then I took entry to the upside. But I just want y'all to see this so that, you could go back test it or you could go train your eye to start seeing these things on a smaller time frame. That way, when you get in your trade and when you get out your trade. Now, do these trades, is this 100% accurate all the time? No, you're going to lose some trades. But the way the market works, it's a higher probability of you winning these trades than losing them because you have a gauge to where to get in and get out. So even on this trade, right? You knew where to get in because just like I just showed y'all, these 4 consecutive candles is considered one order block, right? So you got your gap, you got your shift in market structure here, because your temporary swing, high. You got your gap, you close above that, you got your gap, close above your order block, shift in market structure, change in the state of delivery. So the delivery is not bearish anymore, it's bullish. So you could call this a support level. You could call it whatever you want to call it, but that's your entry to the upside. So you could have took, like I said earlier, from here to the highs here, and you could have been done with it. But like, all right, I don't give a fuck what I don't care what the market does after this. I'm done. Or you could have been greedy like me and like, all right, well, I'm looking for you to take this out, and you know, it worked out for me. But these like the importance of finding these little pockets in the market to where you can make 10 to 12 points depending on how many contracts you trade, that's imperative. I mean, not imperative, but that's important for you as a trader to grow and learning how the market moves. So for instance, let's just say for shits and giggles, it's like you see this gap created and you want to trade this gap to the upside, but let's just say we close back beneath this gap. So that just lets you know, okay, well, we still bearish. So I need to find entry to the downside. So now once we close beneath this gap, I'm looking for entry at the bottom of this gap to take it lower. Where am I going to take it? That's a great question. I'm looking for the lows. I'm looking for the lows. Not Home Depot, lows. That's what I'm looking for. Attack these lows. Look at the swing lows. All this I'm looking for. Come get me. Come and get me.
So when you looking for the lows, how far back are you trying to go? Is it like a week or a few days?
So all right, this is the 5-minute chart. So like I was saying earlier, these are your ranges. So notice how on each range you got to swing high, you got to swing low on each range. This your London range from 1 o'clock to 4 o'clock in the morning. This is the New York session from 8:30 to 11 in the morning. You got to swing high, you got to swing low. This your lunch session. You got your swing high, you got your swing low. You see what I'm saying? So it all depends on where the market is and where I feel like it's going. So if I feel like the market going, if we bearish and I see the signs that we bearish, we closing beneath gaps, and you know we taking out lows and all that good stuff, then I'm like, all right, well, I'm bearish, so I'm looking for the next low. So just like, for instance, let's just say if we were to close beneath this gap, instead of taking entry here, you know, as I say, we traded straight through this gap and close beneath this gap. Now I'm looking for entry here for my first price target being here, this low. Second price target being this low. You see what I'm saying? Because it's a reason why the market leaves these highs and these lows. So once the low is created, let me draw a line. Once a low is created like such, what people do is they'll get long in wherever they choose to get long, and they'll put their stop loss beneath this low. So the market considers that an order. So the market will attack those orders, just like it attacked the orders that were above this old high. So if I'm short, I'm putting my stop loss above this high. You see what I'm saying? So once the market attacks these highs, and you notice, once the market attacks these highs and gets these people out of the market, what does it do? It goes back in a direction. It goes back in that direction. So these people were bearish. We got y'all out. We got y'all out. Then we come get y'all stops out, and then we back bearish. Same vice versa. These people got long. They were bullish below these lows. They were bullish. They put their stops. Boom. We take y'all stops out. We get y'all out of here. And then we're bullish again. So the goal is to be able to identify where the swing highs and the swing lows are. Then once you are able to identify those on any time frame, from 5 minute, 10 minute, 15, 30, whatever, 1 hour, 4 hour, whatever time frame that you're comfortable with. Once you're able to identify them and identify the ranges, your AM session, your lunch, your PM session, London. AM session, lunch, PM, London. You got your Asia session. The Asian session is between 6 and 8 p.m. So you won't have a swing high and a swing low from that too. But I don't typically do the Asian session because they don't move that much. So you can kind of like eyeball it and see what a high and low is and be like, all right. So even with this was the low of the Asia session right here, the swing low. We took that shit out. Am I making sense? I shouldn't have cursed.
No, you're making sense to me.
We took this low
Yeah,
out.
so I'm sorry, I'm working. So essentially, for each session, identify your highs and lows to and go based upon your highs, your lows to identify your momentum swings is what you're saying. If you
Exactly.
get that down, get that down pat, you know the direction in which the market has to trade, i.e., fair gap trade value and etc.
Yeah. Yeah. So basically what I'm saying is in the simplest form, when you trade like this, is you have a clear conscience of what's going on. You're not guessing. So even when you're wrong, you'll know why you're wrong. Like you ain't gotta you're not gonna beat yourself up about it, trying to figure out what happened or why this happened or why that happened. Like, you know what I'm saying? It's like, okay, I took the fair value gap to the upside, to the highs. I got out. I'm done with my trade. So the market could keep going after that. That ain't got nothing to do with me. I hit my entry, hit my price target. I was done. But the gaps that are created off the lows and off the highs, bro, those are the gaps that you look to trade. Now, the gem in all of this is the gem is gaps are created to the upside, like so, on the way to the highs. This is on the way to the high. Once the high is taken and we reverse and be close beneath the gap, that's now an inversion fair value gap. The inversion fair value gap, you take that, you take the gap, the low gap candle, the bottom of the gap, whatever you want to call it, as your entry, you take that to the next low, which is this. Now, I remember telling y'all in a group that evening that I was short. I had got back in the market. Normally I don't do that, but I had got back in the market. I had got short. The reason why I got short was because we created this gap. I'm sorry. It wasn't that. Let me see what it was. What was it that made me get short again? Oh, it was this candle. I took this because, let me show you. And I only took it for maybe like, probably like $400. I took because the market, this was the swing high. This was the swing high. Still the swing high on the 5-minute. Market failed to get back up there. And I was looking at the time of the day it was, and I felt like the market didn't have no momentum to go back to the upside. So once I saw this candle print, I was like, all right, I'm going to get short. Kind of created a small, it wasn't much, but I just got in that, because I was feeling myself, to be honest with you. But normally I wouldn't do no shit like that because that wasn't really a A+ setup to take. It was more so of a hunch than anything. But once you take your trade, bro, and you confident in your trade and your P&L is green, my advice to you is to, take your money and run. But yeah, bro, the gaps off the highs and the lows, even on higher time frames, I'll show it to you on a 4-hour for shits and giggles. For shits and giggles. All right. So even on a higher time frame, this was the high. This is probably a daily high or something like that right here. But we're gonna use these equal highs right here. We took them highs right here with this candle. This candle. We created a fair value gap. Boom. You see the gap here? Entry. This was the trade we were trying to remember. This is a trade from 2 Sundays ago when we was trying to get 48, 28, 50. The order block, that 1 hour order block.
Yeah.
Yeah, and it left
So
us.
5 and a 4 hour.
It left us. This was the gap fill. Boom. So 2 4-hour candles took you from 48.28 to 47.73. Now, it's on every time frame. It's on every time frame. You can find this on every time frame. The daily, 1 hour, whatever. But you have to identify. You have to be able to identify the gaps off the highs and the lows. Now, normally, I know what we normally do is, on the Zooms, we'll look at the weekly, the weekly and the daily and break it down like that. But I feel like this will be more beneficial to everybody to be able to find a trade and be able to gauge it, when to get out, when to get in, when to get out, when am I wrong, and when shouldn't I take this trade? Because we could show y'all how to read these candles all day long. But if you don't know how to trade them, then we just spinning our wheels, to be honest with you. So I feel like showing y'all how to take that trade, showing y'all how to find that trade will be more beneficial to you than us saying, okay, this will happen on the 4 hour. You know what I'm saying? Because you know what I'm saying? But yeah, bro. That's all I got, man. That's all I got. That's all I got, bro.
Yeah, I appreciate it.
That's
I
all
was
I
about
got.
to say this intraday is more, especially on the 5 minute. We're not about to go into those. We can't get that low, I don't believe.
To the 5?
I'm saying point out a trade. Well, you already did. Like if it come down, uh it takes out that low, you're gonna go to that one.
So
And then
here's the beauty of it. So now you got this high, you got your high. Notice this low wasn't taken out. You got this high, right? So all you do is wait for the market to show you what it wants to do. And for me, it's I use the 5 minute and the 1 hour for continuity. Sometimes I throw the 15 minute in there too, but it's the 5 minute and the 1 hour for continuity. So I know, because the 1 hour is telling me the direction. The 5 minutes is giving me entry and also the direction. You know what I'm saying? So even so much like this, when you see this, when we trade back into this gap, and this happened at 6, 7 o'clock in the morning, right? We trade back into this gap and we go. But not only do we go, we create another gap. I wish I was lying to y'all. But the truth don't need no motivation. So this is your gap off the lows. This is your gap off the lows, right? You enter this, your trade here. Create another gap. We respect that gap. Wick beneath it, but never close beneath it. The wicks do the damage, but the bodies tell a story. See that? So this is why I use the 1 hour. The 1 hour tells me what we trying to do. Like, what are we doing? This is my direction. Sometimes my 1 hour chart is my daily chart. Like, I don't even go to the daily. I just use the 1 hour, because the 1 hour shows me what I need to see. And I'm not trying to trade all day anyway. I'm not trying to trade all day. I'm not trying to trade 4 hour candles. I'm just trying to get in my 5 minute trade, find my point of entry, my point of exit, and I'm done. But the 1 hour tells you, bro, what you need to know. it shows you respect. I respect you right here. I respect you right here. So that to me shows up. We want to go up. Up is the way to go. So once I see that, okay, I could just go to my 5 minute and be like, all right, bet. So this is the original entry. Hold up. Let me see. 92, 91. What's the low of this candle? Let me see. Let me see how I look on a 5 minute right quick. 47, 91, 50. Right here. I wouldn't have took that shit. I'm not gonna hold you. I ain't all the way there yet. I wouldn't have took that, but you see how off that low we created this gap. Now
What's
I
that
would have,
number, Mike?
huh?
What's that number?
Right here.
Yeah, that low that you on. No, the other one down there,
This one right here.
the bottom. For the hammer,
47,
right?
47, 91, 50. 47, 91, 50.
Okay. Hold on.
But you notice, I want y'all to draw your attention to this too, bro. When the market rebalances like this, so if a market creates a gap, then another gap on top of it, like this, when it rebalances like that, that just tells you that the market ain't, we done selling. Even here. When we going up, we going higher, and the market just immediately rebalances like that, we going lower. These is gems. These is gems, dog. These is gems. Any questions, comments, or concerns? Nope. All right.
No, this is informative. I just go back and write what I need to write. Keep that in my bank.
All right. All right. So that being said, guys, I'm gonna go ahead and
And you got Mike. What you got in that 4803? You was up higher, huh?
up here. So what I did was, so I'm gonna be 100% honest with y'all. I wasn't at the computer when we hit this order block. So I wanted this entry, but I got in right here, up in here, like 48.11. So I missed my entry by a couple of points because I think I went to the bathroom or something, whatever happened. So I ended up getting in. Once I seen this order block and we hit it, we're respecting it. I'm like, all right, cool, we'll be taking it to the highs. But yeah, my entry was a little off. But if I was sitting at the computer, I would probably got in right here. I probably had some orders here and some orders here, just cause.
But if you go to the 10 minute,
Let's go to the 10.
and you go back, I took the cheap route on which one it was? Which one was it, Mike? It was your, I think it's that first gap. Yeah, that one. You see, you see the one where you buy right there?
Right here.
Yeah, that gap there. I took the fill on it to the downside. I didn't take the retrace. Didn't take the retrace on it.
But see, so
I just got a little bit out of, you know, I'm not a fan of like the same way how you went to the highs. You don't necessarily play it back down.
Right.
Like,
Right.
like you'll get out and then you'll probably like, well, I know it's supposed to go down. Why am I not playing it down? I don't know, because that just fucking mean money. You know what I'm saying?
Exactly.
Then you might, like a few candles later, be like, oh well, now I'm about to get in. But I'm never gonna have a sell to get out of a trade up there and then take it back down from the high that I knew it was gonna come take out.
Right.
I play the gap fill, I'm not gonna play the retrace. But if I don't play the fill, then I think I would have played the retracement back to the upside.
That's crazy. So even on a 10, like right here, this is a 5 minute gap.
Uh-huh.
You can't see it. That's why I like the 5 minute. But anyway, that's crazy that so even on this gap on the 10 minute that was created, we closed beneath it. Inversion fair value gap. Damn. Into there. But at this point, at this point, the entry for the fair value gap on the 5 minute is probably up here somewhere. Like here. So once you close below the 10 minute gap, it's a little lower. But at this point, you take it to the gap fill now. Because you see, we didn't close below this low.
Mm-hmm.
Oh
Just the
yeah.
gap fill.
Oh yeah. So we didn't close below this swing low. Oh yeah. You taking it.
Then if you look at so if you look at that one, then you had the 10 minute. You on a 10 minute right now?
Yeah, it's a 10 minute.
What is bitch at? Hold on. I'm trying to correlate it. Oh, that's why. So I think it's the same thing on that 60, bro.
What's that?
You go to
Go to the one?
your 60 minute and go to your 6 o'clock on Jan 12. Yeah, the same place where you got your line. So this is why I messed up at. I was unable to get into this gap field, and
Mm-hmm.
I should have been playing a retracement. And that would have got me that whole move that you got right there. So you see that gap to your left at 7? Yeah, that one.
This one?
If you look at how the candles close, right? You draw your gap at the bottom.
This one?
Yeah. So you get your bounce on the first one, which is small. Then you close inside, you lose
Right
that
here.
trade. Let's call a spade a spade. I lose that trade.
Mm-hmm.
Then when it comes back,
Because you're taking this trade down.
taking it down because it closed inside of there,
Because it
right?
closed inside the gap with it reversed.
It reversed. Bam. But when it comes back in that next time, it just goes field it. You see what I'm saying?
Mm-hmm.
But it gave you entry on the 10 minute, I believe.
Let's see. This your gap.
That's the gap we're talking about.
Mm-hmm. Or is it this one?
I think it's this one.
It's this one. Yeah.
Did it give you it? No, they both just went filled it. But by me not getting that fill, I should have been in on a retracement of it.
Hmm.
And now you're in that trade.
Hmm.
So I found that if it goes and just fills it without coming back and like checking off, just go through it,
Mm-hmm.
that's a higher probability you're gonna get your retracement like ASAP.
Yeah. So, yeah. Yep. So
And
not to
that's
be
why I was telling you, I was like, that's why I thought you got in at that point. Cause that's what I was looking. I said, did this? I'm looking at the numbers. I'm like, oh, that motherfucker got in on a retracement. But it was you in for a different reason.
yeah.
Yeah.
Yeah. I wanted to get in here at this auto block, but I missed it for whatever reason that I had got up from the computer. But And I ended up pressing a button because I normally trade 3 contracts. As you can see right here, it's 3 contracts.
Uh-huh.
No cap in my wrap, but I ended up pressing the button twice. On my mouse did it, so I was in 6.
Yeah.
But yeah, but
I
bro, I
that's
just
like the most scariest and uncomfortable situation to be in.
in more contracts that you want to be in.
Yeah, because then you're gonna either you're not thinking to go against like so you get 6. You're not thinking to say buy if you buy it, you're not thinking to sell 3 of them so you could be in your initial 3. You about to
Now you
close out your whole position.
my whole position,
Yeah, I'm about to get out the whole fucking thing.
yeah.
Then it's like, but I know it's going up. But man, I got buku fucking contract. You
Yeah,
just pray
yeah,
that go green now, cause I'm not shit.
yeah.
I'm not
So
shit. I can't
so
take no on this shit.
so the gap. So it was really, yeah, it was really, yeah. Yeah. But it was green the whole time. Like I think I must have took like a couple of maybe like a couple of ticks of heat, but it was green the whole time, and I knew it was gone. And I'm like, this is easy right here. I could easily just take my profit right here. I'm like, nah, we going high. But
And I'm stalking it. Cause
yeah,
I know
oh
I done
nigga,
made my
what?
money a lot quicker. So now I can just lock in quicker.
Yes, indeed.
Yeah, now go ahead and run.
Yeah.
What you had told her on the phone? That was a sign. That was a sign from God.
For real, like, look, you take these 6, brother.
Take
Yeah,
these
I
6
got you.
right out.
But yeah, bro. So I just want to show y'all, man. Because I know some people struggle with entering where to enter trades and where to get out of trades. How how I know what we about to do or where we going. I just say pay attention to your highs and your lows, even on small ranges like this. Pay attention. You know what I'm saying? Then you'll be able to start to add stuff to your trading bag as far as noticing that, oh, we got this gap down here, we got an order block down here that we're gonna hit, stuff like that. Then we have this gap down here too. Is you know what I'm saying? So these inefficiencies draw the market to, draw interest from the market because that's the only thing the market is looking for. The market is looking for liquidity, and liquidity is above old highs and old lows, and it's looking for inefficiencies, gaps, volume imbalances, things of that nature. So once you are able to gauge that, and you see this, like right here, you see we trading at right now for shits and giggles, a market close, but 48.11 we trading now. So you're like, okay, so efficiency. Whereas clearly we fill this gap, boom. So are we going to continue lower to these prices? You know what I'm saying? You just let the market dictate to you. So even if we take this low out and then we reverse course, create a fair value
Huh?
gap. If we reverse course and create a fair value gap back to the upside, your entry is that fair value gap to the high. But the high was probably going to be 48.24. So that's not overcomplicated, man. That's just be able to spot these swing highs and swing lows, trade the gaps that come off of them. Now, when the market is moving strictly and solely in one direction, these highs get violated. If we're going bullish, the highs we just keep creating more highs, right? So in those conditions, it might not be as easy for you to trade. But when the market sets a range like it does, and we're attacking highs and lows, that's the easiest time for you to trade the market. But on days when the market is expanding or we super bullish or we super bearish or whatever the case is, then those days are a little bit harder because it's like, okay, we taking out lows, we taking out lows, we taking out lows, we just keep taking out lows and we're not reversing. So those are the days where you probably just want to sit and take notes and watch what the market does. But on days like this, when it's easier to see the lows and the highs, and we taking out lows and reversing, we taking out highs and reversing, and those are the easiest days to trade.
All right. So, with your experience, what do you do when the market only goes in one direction? But so do you just sit out just to see like what happens like the next day, or you just have whatever type of system that you know what kind of move you looking for next?
All
Because I
right.
struggled with that about 2, 3 weeks ago. It's like because it just kept going, and I was just like, this shit kind of hard. Oh,
All right. So look.
That was
So look.
crazy. That was
Yeah. So look. So
that was
this
crazy.
that was
Yo,
pause.
Mace. Mace,
So you
I
sit
pause.
so
don't
So we
say
don't
on
forget
days
pauses.
on days
man.
like that, bro, you sit out because you don't know what's you don't know where the market is going. Now, 9 times out of 10, even when the market is headed in one direction, it's going to take out a low, right? So even on this day, the market was stupid bearish. But what we took out this low, we took out this low, right? And this is about to fuck you up. I'm about to fuck your mind up, Craig. So look, so even if I wouldn't advise you do this, but if you're trading and you see the market is extremely bearish and you see this swing low just chilling out here by itself, and you say, well, this is the price target. You could trade, you could find a smaller time frame to find a reason to get in this trade to sell down to this low, right? You can. It's not against the realm of possibility. You could do that. But here's the kicker. So once we take out this low, right? All right, man. Once we take out this low here, what happens? Fair value gap. What we do? We come back into the fair value. Man, let me close my computer. We come back into this fair value gap and
Draw it
go.
out for him, because I'm not gonna even like once we
Hold up, let me go get my charger right quick. My computer tripping. This is information, man.
we'll
I'm
just
taking
leave
notes
this one
myself.
here like this too. We're not gonna go to the hood or not. We'll just leave this one up with whatever the information Mike giving us. Cause I'm gonna go back and look at it too. Try to uh, get a little bit sharper on his style of trading.
All right, so here we go. Here we go. Here we go. So look, here we go. So market was extremely bearish on this day. I don't know if news came out, whatever. Yeah, whatever happened. So we knocking out these lows, swing low, swing low, swing low, swing low, right? This has got to be your price target because this nigga, he just out here chilling by himself. Liquidity is above all highs and all lows. I want y'all to remember that. So let me draw this out for you. You got your low here. Matter of fact, let me see. Got your swing low here. Market took that low out with this candle. See that? Took it out. So people that were long here in this run, this bullish run here, people that were long, they put their stop below this low. So the market said, all right, well, I'm about to come get y'all out the market and I'm gonna go back in that direction. So when that happened, now this is the 1 hour time frame. When that happened, you took the low out, sharpen your eye. It's a fair value gap here. Let me draw it out a little bit more so you can see it. Fair value gap.
Right now, I'm gonna let you know too.
Look,
What he said. I'm not even trying to take we taking the top of it, right?
the gap.
Yeah.
Well, by this being it's a small gap, but all in all,
I'm saying I'm taking the top of it because I'm not gonna wait for the bottom part. Like you get left. It is not enough downside for me to be like, okay,
so
let me be cautious. You know what I'm saying?
right. So here's the beauty of everything I'm everything I'm trying to show you guys and how it works on all the time frames. So we created this fair value gap. Shout out to ICT, by the way, because I learned all this shit from him. But anyway, because I know it's gonna be on YouTube. I'm about to be famous. Anyway, we create this fair value gap here, take it to the upside. But the beauty of it is there's a gap here, a bearish gap. There's a bearish gap here, right? Here's the beauty of this. We closed above this gap here. We traded to half of this gap. So in my estimation, like, all right, cool. That gives us more leeway to go higher to the top of the gap. So you enter here. Your price target is here.
So I was gonna make him go in the store. The trash bag.
So this is making sense? Is this making sense to y'all? So look. The you swing low.
I speak.
Sure, you can.
I'm just going on a few other, probably 2-3 weeks ago, we had Charles and Chain there. Then you have the other part of you going up and taking out a high with a gap, correct? So
Yeah,
go to your left, to your right.
Mhm.
No, where you was at, this gap that it made a little
This
bit more
one?
right, going up.
Right here,
No, to the right.
this one.
That one. You took out your highs with that one, right?
Mm-hmm.
And he said if you take out, it creates a gap while taking out one of the highs or lows, that's the gap you want to play.
Mm-hmm. Here's the kicker.
Yeah.
Here's the kicker though. Here's the kicker. This is about to fuck you up.
I got in that one, like, oh, that.
Listen,
Hey.
but listen. Here's the thing. So even on a 5-minute, let me go back to the 5-minute and draw your attention to this. Remember I said we closed above this high, right? Close above this order block here. Entry is the order block. Take the order block to the highs, right? So let's go back to the 1 hour. Your original gap down here, entry, boom, you take it to this high. So we closed above this high, we created a gap, right? So we consolidate here. This is a consolidation. Call a spade a spade. But when we trade back down to what? What we trade back down to? The order block. Is it is the seasoning kicking in or what? Is it? Do I need some more?
Oh, that nigga cooking.
I need some more Tony Satcheries or what? What I need?
I'm following you now. I get it now.
Now this is a higher time frame, right? This is a higher time frame. But the rules are the rules. Now, this is so look. Yeah.
Oh.
Come and talk to me.
Man, I knew I liked this nigga.
So when a market is bullish, it's easier for you to see. Now, me personally, I'm more of a bearish type person. I like selling more than I like buying. But if I gotta buy, I'm gonna buy. But if you give me opportunity to sell, I'm gonna sell.
Hello, now. Where you at now?
But yeah, bro. Got your high, you close above your high. That's your gap, right? So now this is your next point of interest. So this gap lets you know that we were still bullish. This gap lets you know that we still bullish. The original entry down here, that lets you know off the lows. The gaps off the lows are the most valuable. It takes you to the promised land. Now, I'm not gonna hold you. I'm not mature enough in my trading career to sit in a trade from here to, but I'm a day trader anyway, so these are different days. But I'm not mature enough to sit in this trade from here to here unless I'm trading options. And y'all know I don't be in the hood no more. But calling a spade, you want certain things to happen before you actually feel comfortable taking the trade. So even when this gap is created, we trade away from it. So you could call this a gap bounce. You can call it whatever you want. But those gaps off the highs and the lows are the ones that treat you the best. They pay off your house, your mortgage, they pay off, strip club, whatever you want to call it, whatever you do, whatever your hobby is. But once the gap is created and we continue to the upside, notice how we took this gap out. We closed above this gap here. We came to the equilibrium of this gap in a sense. Then we traded back down to this gap. Now, back in the day, you would say, "Oh, we picked up some more buyers, bruh." So, kids, anywho. So back in the olden days, you'll say, "Hey, we picked up some more buyers here to bring it back to the upside." So price target would be like, "All right, well, I'm trading we fill a gap." You know what I'm saying? So from 47.55 to 48.21. Yeah, 21. Yeah, that's it. I'm sitting in this trade till we fill the gap. The market is telling you that we backing you up. We got your back. But I'm not mature enough to be holding trades like I'm just not. I'm not gonna hold you. I'm just not. I'm just not. But the market is showing you exactly what it wants to do. And then even off the high, right? Swing high. Let's see. Now after this, I'm gonna be done because I know y'all tired of me talking. Let me fix my chart, dude. So we got equal highs here. You got relative equal highs here. We take these highs out, right? Create a small gap. This is a very, very small gap. So you could get short here. You might not be ready to get short. Like, ain't enough information for me, right? Cool. You could wait to create another gap. Close below all these lows, right? Then once that gap is created, what you do? Get short. Now, Winston, we wanted this. We wanted the order block, and we didn't quite get the order block. We got the gap fill, and once we got the gap fill, it was off to the races.
That was a hurtful one right there, buddy.
But this gap was created off the highs. This gap was created off the lows. Are you picking up what I'm putting down? Downtown, Jackie Brown, Brown. So that's it, bro. That's all I got, man. That's all I got. That's all I got for y'all, bro.
We're gonna leave this one as it is.
That's
no
all
hood
I got.
today.
So we could sit here and talk about what we think the market is going and what we doing and how I'm trading this and how I'm trading that. But I think I just gave y'all, a different way to view how the trade, especially during because we're not swinging trades on the ES. We just not doing that. We just trading intraday price action. And this is the best way to view intraday price action. This is the best way to view it, bro. Get your ranges, your London, your New York morning, lunch, evening. High, low, high, low, high, low. Where's price? Where we going? Where's the gap? Where's the inefficiency? Where's the order block? Where we going? Where's the low? Did we trade to the low yet? Did we trade to the high yet? No. All right, cool. I'm taking it down. I'm taking it up. Whichever direction the gap is created in. Boom. Gap's created to the downside. We close below this gap. I'm taking it down. Simple.
Now when?
What up,
You see
dog?
why I said he mastered that price action?
He been when I met him, he was price action. Now he just sharper.
Yeah,
But
just let the market tell you, bro. Like,
this other little guy he didn't met, you heard me? He
right,
didn't
ICT,
count,
dog. I'm telling you, bro.
count
Them
on.
videos. Yeah. So look,
I'm gonna tell you, I tried his videos. I just have you come here every time. Like that's why I ain't gonna mess with this one. I'm gonna come back and watch this
yeah, this one's
one.
gonna be this a good one, bro. This a good one.
Yeah,
This a good one. I was thinking about this all morning. I was like, man,
I
how
ain't
many?
I ain't dealing with your people. You heard me? I'm dealing with you.
Yeah, because I'm gonna be able to talk. I'm gonna be able to,
Shit.
break it down to where you understand it instead of have you
That's
having to
your
sit through
that's your
the
man's in them. You heard me? I'm dealing
yeah
with you though.
sit through them long videos. Them long dog, them lectures be long, bro. But this all I do. So sometimes when I'm not trading, I'll be watching the video, sharpening my tool set. But this is I think if you want to go watch his videos, um this video, well, of the things that I explained to you today is called his model 2022. In the model 2022, he explains this, right? So if you want to watch it, you could go watch it. But if you want to listen to me explain it, if you resonate with me better, then because he an older white man, and no offense, but we more urban, ghetto, if you will. So
No.
that's it, dog. That's it. So I'm gonna say like he said, I encourage you when you have your summer downtime to go back test this. Go find old highs and old lows. Even go back to 2020 if you want to, and watch how the market responds off of those whole highs and lows, especially during intraday trading, when you might have to break down, bro, and get in that 5, dog.
Yeah. I'm not totally against it. As the days pass and I see I've only taken one trade per week.
Yeah.
I know that's the first thing is what they said is admitting there's a problem. That's a problem. That one trade a week is not cutting it for me. Waiting on that hour is not cutting it. I just can't. I don't know. It's too
Yeah,
long.
bro. You might have to break down that 5, bro. It's not bad. The water's fine.
Go over there. Pass back right here.
The
How y'all
water's fine.
doing? Mike told me I was giving out
Free turkeys.
free piano lessons. So
Oh yeah. Come on.
hey, come over here.
Yeah, we had you being Beethoven in an
Are
hour.
you sure about this?
You sure about that? You sure about that? Yeah, bro. But so the takeaways from the day, and then after that we could get off, bro, because we ain't about to be no dead horse. The takeaways from the day is being able to recognize swing highs and swing lows, swing lows, gaps that are created off those highs and lows, entry into those gaps to take it to the high or the low. And that's it. That's it, bro. That's all I got, man. That's
One
my
thing
day.
I do need you to clarify one thing for me.
What's that?
If you could, I don't want you to really mess up your chart like that, but can you go to the 4 hour? I even clarify. You see, we're on the same page. So we're just waiting for that right there to break, correct?
So what you mean?
Right up there at the top.
It's high?
At PP, no.
Oh,
PP,
this?
yes.
Yeah. So look, so on this higher time frame, so this the kicker, bro. So you got your swing low. So you got a swing low here, you got a swing low here, you got a swing low here.
And take that swing low out. Yeah. Okay, we
You
good.
see what I'm saying?
Let's go ahead.
Your first price target is 91.
Let's go ahead.
You did?
Let's just go.
All right, here we go. Y'all have a good one, bro.
I appreciate you.
Appreciate y'all, man. Tip the bartenders.